This video is sponsored by Mark 7 Car Wash Equipment, providing clean, dry, shiny cars for over 50 years. Visit mark7.net for more information.
Welcome to another episode of Unscripted, the video series that connects you with market leaders. Today on our Unscripted video, we're happy to welcome Bill Martin and Jeff Pavone, partners at Amplify Car Wash Advisors. Hello, Bill and Jeff, and thank you both for joining me today.
Hi, Rich. Thanks for the invite.
Hi, Rich. We appreciate it. It's always welcome to chat with you.
Feel the same. So today's topic, gentlemen, is on market trends and looking forward towards the future of this evolving car wash industry. And it's my understanding that traditionally this industry has been considered an easy entry business for new investors. So is that still the case today? And is raising enough capital the number one hurdle a new investor must overcome to become a car wash operator today?
Well, let me jump into that one initially and say that entering the car wash industry from the standpoint of building a platform or building a site has always been pretty straightforward. Today, I think it's even easier because of the help and the assistance you get from the manufacturers. So they give you a whole playbook. You might even be able to buy a franchise that lays it all out for you. So in that sense, it's easier. Money is more readily available. One thing I would take exception to in the past, historically, while it's been easy to get into the business, it's not always been easy to grow it in a good fashion, a profitable way, because what investors and new folks entering the industry find is what looks easy on the outside is much more complicated when you start to unwrap it and peel the layers back of operating and running a platform or growing it. And of course, in the past, most of the car washes have been full serve, and those were very difficult to manage and to grow. With the advent of the Exterior Express, it's been a lot easier to, and with the help from the manufacturer, been a lot easier to grow these platforms. So we're seeing more of that coming on. In fact, some people are arguing that in their markets it's reaching saturation, but I think that's there are some markets where clearly it's happened, but I think there's still a lot of headroom. But I'll let Jeff address from his perspective.
Yeah. So to Bill's point, I think it's right. I think getting in is fairly easy with the playbook that the manufacturers are putting out. But on the other hand, I think it's been it's far more risky, and I think you're finding less and less new guys coming in the market because every market now has everybody in every market is growing, and so you're finding, first off, finding property and getting real estate. You're competing with multi-site operators that have an in already in the market and can pay more. So I think your new investor is going to be finding it a big challenge of finding sites. I think that's the number one issue they're having. And then two, I just think new investors are now absolutely getting scared off by multi-site guys in every market in the country growing and being able to be competitive.
Okay. Now we're seeing widespread consolidation in this industry. And I'm curious, would you consider this maturation of our market or a market correction in any way? And is consolidation at this scale inevitable in mature markets? And how is our industry's development any different in any way?
So, I think maturation, I think finally this is an industry that can be consolidated. So as technology has come into play with the Exterior Express wash, really leading the charge of consolidation. You've got technology that can manage these sites. You've got recurring revenue with memberships, and then you've got on the other side you've got private equity groups with just an immense amount of dry powder to want to put into growing platforms. So this is no different than consolidating lots. Like there's a lot of industries that are consolidating. A lot of it's being driven by, Wall Street and private equity, the amount of dry powder that's on the sidelines. And the car wash space has proven to be very, very resilient through recession, through COVID, and now is really gotten the interest of Wall Street and private equity. So it's really at maturation. I don't think it's anywhere near its peak. So we got a lot more to go.
Yeah, I would second that. I think that if you look at the just sheer number of units owned by let's call them consolidators or private equity in relation to the size of the industry, it's really the tip of the iceberg. So I think that, and we keep looking for and expecting some of these big boys to come together. It's kind of expected. It should happen at some point, I assume. But what's happened with membership and the membership model is I don't think anybody really knows how much headroom we do have, how much growth we could experience, because once you get somebody sold on a subscription, the growth, is just exponential. And we've experienced that in our own site. So yeah, there's definitely a consolidation effect. People are a little concerned about it. I think we've got, we're in the first few innings of that event, in my opinion.
Okay, interesting. So I'm curious, we see and we cover a lot on carwash.com, mergers and acquisitions on a weekly basis across the board in this industry. Do you gentlemen believe that we're currently in a buyer's or seller's market? What type of multiples are you seeing in the market? And do you expect changes in multiples over the next 12 to 24 months?
So this is a great question, and this is my answer is going to be we're both. We are in a buyer and a seller's market. This is the first time I think these things have met, and I say that because up until now you had a lot of sellers interested in building out their platform, growing, they're loving this business. I think a lot of sellers today, and again, it turned at the beginning of this year, are now looking at the inherent risk of private equity coming into their markets and then not being, on that ride, missing out. I think they're looking at the potential tax code change, maybe goes into next year. I think they're looking at, all the risk now involved in not selling. And so this is the first time that I can recall in a long time of having lots of sellers available for buyers. So in that sense, it's working. On the other hand, we have more buyers in this industry, more money coming in the space. So it does become, an opportunity for sellers to cash out in a nice way. So I think it's just the first time I've seen, this thing kind of be the perfect storm of buyers and sellers. Now, as far as multiples are concerned, we're seeing that the multiples are in some respect peaking for some people, but there's a premium being paid to platforms that have an infrastructure and they're regional leaders. So when you look at the groups like Tidal Wave, the transaction that just happened, and some of these other groups, the chains that have built a corporate infrastructure that can scale and grow the company, we're seeing those multiples continue to rise. If you just got car wash and you got EBITDA, those multiples are pretty well stabilized. But I got to tell you, the multiples are going up for market leaders in a region that can continue to grow in a region and show a path to scale and growth. Those guys we're still seeing multiples go up.
Okay.
And I would add that because multiples have continually been inching up, that operators who might have said, I'm never going to sell, I'm not a seller, they're rethinking that strategy because at some point it's just too hard to resist the temptation. And you couple that with the increased competition that they're they might be looking over their shoulder. Maybe they're not the keenest operator in the market. So they're really rethinking, I think that their whole strategy about continuing versus exiting.
Okay, understood. So last year in our November issue, we published some research and we took a look at the top 50 car washes in the U.S. Conveyor chain industry, and we noticed that the largest car wash chain, Mr. Car Wash, has about less than 1% of the market share in terms of number of total car wash locations in the U.S. You know, when comparing that to some other industries, just doing some quick informal research that I've done, I've noticed that the larger chains or the larger brands seem to have anywhere from 4, 5, even 6% or higher of the market share in terms of number of locations. So, Bill, you mentioned before, we're waiting for some of these big chains to combine here. So I'm curious, do you gentlemen foresee a large-scale independent national car wash chain emerge in the U.S. Market? If so, when? And if not, why not?
Well, I'll let Jeff maybe want to chime in on that, but let me just say that I think that it will happen because there's not as much, I think, benefits of scale that they might get as they might in some other industries. But the reality is it's going to happen because some private equity firm will decide they want to exit the space, and they'll flip their platform to another one. And once they start to get some scale, they will get continued growth. So I think it'll happen that those will come together. But as you said, you pointed out, if you take all the consolidators, all the PE firms together, it's probably less than 3%.
Yeah, and Rich, and I agree. What's happening now is you're seeing a multiple platforms being developed to grow quickly. And before they wanted to get to 50, now they want to get to 100. Now they want to get to 200 sites, and they're doing it with the philosophy that they're going to build this scale and this EBITDA, and it clearly to sell to a bigger player. So I think within the next 24 months, you're going to see the growth on the top 1, 2, and 3 chains. You're going to see maybe some jockeying going on, but I wouldn't be surprised if we're not going to see you're going to see guys with 400 or 500 car washes and really starting to get scale, but they're going to be buying some of these secondary platforms that are out there. That part of it's going to start consolidating. It's a matter of when, and I think it's going to be, sometime in the next 24 months, you'll see some of that consolidation happening.
All right. Well, that's certainly a cliffhanger and something to monitor here moving forward. Thank you, both you gentlemen, for joining me today and doing this interview for carwash.com and lending your insights into the market.
Rich, thank you. Pleasure as always.
Thanks, Rich. I appreciate all you do for the industry, and thanks for including us in this podcast. Appreciate it.